Hello and welcome again to another episode of the Uranium Market Minute. Today is Friday, January 28th. This is episode number 71. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. If you are a member, please make sure that you are receiving our emails. If you are a member and have not received an email from us in a while, send us an email, support@uraniuminsider.com. We'll make sure that your account is in good standing because you should be receiving a bulletin from us likely within the next week for a new position. The timing will be very, very important on this. I want to make sure that you get that. So with that said, if you aren't a member and you are interested in getting a sample of our content, click the link in the description below. You can get a free sample of one of our previous month's newsletters, get an idea about the type of content that we put out, and we would love to have you on board. Interestingly enough, when sentiment is extremely high, that's when we have a lot of interest in our services, when the stocks are really flying, and when the time to really be buying is when the interest is low. So I find that really odd. And of course, you know, when sentiment is low, that's really the time to buy anyways, and retail just doesn't want to touch anything when the sentiment is low. And that's exactly this point right now. So kind of the irony that we can never really escape in the investing world. Before we jump into today's video, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. As we get close to wrapping up what has been a very, very volatile week for uranium, it does feel a little bit lighter. It feels like the market is slowly digesting the Fed news. It feels like uranium is possibly putting in a bottom. I'm going to share that similar chart again today, where I show the relative performance of the miners relative to the metal. I think that's a really intriguing chart, and that looks promising as far as a bottoming pattern, a bottoming candlestick that's printing today. Of course, a single day does not mark a bottom necessarily in the short term. We could see some continued weakness going forward, but things seem to be feeling a little bit lighter here. So let's just fly through the daily scoreboard here. Not a whole lot to report. The spot price ticking down slightly, and this is right on time. Every month, not every month, but most months you'll see a pushing down of the price towards the end of the month. I mentioned this yesterday, and I'll talk about this a bit more briefly in the mailbag section. So trickling down a little bit, but for the most part, hanging in there. Yesterday, SPUT Physical Uranium Trust did not raise any new capital. However, during a TD mining conference that happened yesterday, CEO John Ciampaglia did confirm that their application for the New York Stock Exchange listing is in process. That is going to take a number of months. There will be a public comment period during the SEC review of this application. That should be coming in the next few months. We do still expect this to happen, and it will likely happen in Q3. That's what we're thinking here. Typically an NYSE listing for an average, common type of company, common type of vehicle would take maybe 4 or 5 months. They expect this to take a bit longer because it's a novel vehicle. There's never been a physical uranium trust listed on the NYSE. That's why they expect it to take maybe 6+ months. Either way, Q3 story, and in the meantime, it's accumulation time. So that's either way, good to hear that from Mr. Ciampaglia. Yesterday, SPUT closed at a minus 2.73% discount to NAV. The stock is up a bit today, however, on pretty meager volume, so still at a discount to NAV. They didn't raise any cash yesterday, didn't buy any pounds of uranium. They're sitting on 23.2 million in cash. And as we know, they're unlikely to draw that down very much, if at all. So they need to raise new money. Purchased 2.7 million pounds year to date, month to date, and they've raised 122.4 million so far this year. A very strong start despite the market weakness. Now they're sitting on a total of 44 million pounds of uranium, and they've raised over 1.1 billion total since last August. Turning to the sector equity ETFs, URA reported no change. URNM reported a slight drop of 25,000 shares. That's just over 1.5 million in mandated selling. Drop in the bucket compared to the actual action of the sector. So again, minimal redemptions in terms of outstanding shares for these two ETFs, considering the market weakness. Just this is unbelievably noteworthy. Something I'm just going to keep pounding the table on this because I think this is a sign that we all need to pay attention to. So looking at yesterday's market action was pretty bad. the shares really got drubbed. Cameco led the charge. It was down multiple percentage points yesterday. Most of the sector was deeply in the red, without much recovery intraday, even towards the close. Today, things are looking much more positive. There was some selling off in the morning hours, and most of the stocks in the space are now substantially in the green, going to print a number of hammers on the daily, even though on the weekly, that was a rough week. There's no getting around that. So let's just take a quick look at the charts. URA hanging in there just above that long-term trend line that I highlighted yesterday. Again, we could still see some downside here. We would like to see the sector stabilize going forward before we really call a bottom, and just overall broad market sentiment to continue to rise. And I think that both feel like they've printed at least a short-term bottom, but not really calling it here. We could see some further downside. Of course, we still have URA rebalance selling that is likely to happen throughout the course of next week. I believe that they've done a decent chunk of that selling, including a decent bit of buying of the SPUT Physical Uranium Trust and the other holdings that were added. So SPUT up almost 1% on the day, still sitting at a discount to NAV. Nice to see the weekend with a little bit of a hammer. And actually, this was a decent week for SPUT. Relative to the rest of the sector, this stock was up over 3% on the week, which is astounding outperformance considering what we witnessed. All right, so the mailbag section here today just had a question come in. Justin, why does the spot price often tick down at the end of the month? So you have a number of traders. There are a lot of traders in the uranium space. These are folks that will trade pounds back and forth, basically making a play on interest rates, making a play on location premiums. So there's 3 primary conversion facilities that store uranium. There's Cameco, Comurex, and Converdyne. Converdyne's in the States, Cameco obviously in Canada, and Comurex is in France. These 3 storage locations for UF6 are and U308 are where pounds can often be traded back and forth based on premiums or discounts for the demand or lack thereof at that particular location, depending on who the end user is. So there's a lot of trader action in the spot market, especially this month. It's been mostly trader action, and there's been a lot of it. So there's still a lot of this reverse carry trade happening out there, right? So this is traders that are holding pounds held in carry. These are traders that have I'm just giving a little bit of backstory before talking about the month-end smash in the spot price. So, and I've talked about this before, but I think it's worth reiterating. There are traders that have signed contracts with utilities in the past where they are promising out X amount of pounds to be delivered at X date in the future before they actually even have those pounds in their possession. So they will add the interest rates, they will add the cost of storage at one of the facilities, they will add their own profit margins. That is the price penciled into this delivery with this contract with the utility. And in the meantime, they will acquire those pounds often from the spot market. That's how this has been a fantastic trade for traders for many, many years. This has been an incredible source for cheap, abundant uranium for utilities forever, and to the detriment of miners, especially like Cameco. So not all miners, of course. I mean, the pounds have to come from somewhere, right? So, but there's a huge oversupply from the previous decade. Still, you have pounds coming from some primary production going into these carry trades, coming from BHP, where their Olympic Dam mine uranium is, essentially a bonus from their copper and gold production, coming from the Uzbeks that produce really a low cost, et cetera. And so what you're seeing now, to some extent, and it depends on the level of backwardation, you're seeing some of these pounds held in carry be sold into the spot market. And then those traders will go and cover their delivery obligations in the future by taking on a midterm contract out into the future at a lower price than the current spot price. Now, there's only a slight backwardation right now, so we don't believe it's happening in big volume. When we have greater backwardation, especially when SPUT is buying heavily, we're going to see that reverse carry trade pick up some steam. That provides some short-term liquidity into the spot market. But what it also does is this pulling pounds out of the future. So midterm pounds that would have been available elsewhere are then being covered by this reverse carry trade because those pounds are being sold to SPUT, which essentially is an end user. With all of that said, what happens is a number of these traders who have offtake agreements. So they have, for example, they might have an offtake agreement with the Uzbeks where they get X amount of pounds or the right to purchase X amount of pounds per month from that producer. And the price that they agree upon is based on the month end closing price for the spot market. So that trader or other traders might have an incentive to trickle some pounds into the spot market, lowering their ask and pushing the price down the last day or two of the month. That affects their price going forward. Then they can buy those pounds cheaper from that offtake in the forward month and do whatever they wish with those pounds. So that's why you'll often see the pounds be smacked down at the end of the month. It's never really a concern unless it's huge moves on big volume, but it's just dropped down 25 cents today. Not really that big of a deal. All right, so going forward, we expect that the market will likely see some consolidation next week. That's kind of what we're thinking. This has obviously been a difficult week for many, especially in the uranium sector with the outsized beta. There's no skirting around that issue. It has been rough, but we've honestly been very greedy and aggressive here. We will be putting some money to work in the short term. So as I mentioned at the top of the video, if you are a member, please make sure that you are receiving our emails. Send us an email, support@uraniuminsider.com. If you are not receiving our emails for whatever reason, you're going to want to be able to put on this next trade in a timely manner. So be on the lookout for that email likely in the next week. We're looking at some very attractive options trades. We don't know if that's what we're going to do with that cash, but we've been patient with it. And I think that has proved to be smart over the past couple of weeks since we had that cash roll in. And so, yeah, keep on the lookout for that if you are a member. And again, if you're not, click the link in the description below or send us an email, support@uraniuminsider.com if you have any questions about our service. Either way, I hope you all have a wonderful weekend. Get away from the screens, get outside, connect with friends and family, enjoy your life away from the markets, because there obviously is a lot of life to be experienced off the screens. And I think that we'll see a bit of a better week next week. And then going forward, obviously, huge expectations for this market in the mid and long term. So we are accumulators here, and I hope that you are as well. All right, take care, be well. We'll see you guys Monday. Cheers.